I picked up the Silver Bullet strategy and lifted his win rate from a 50 to a 70% with a unique feature of Forex Tester Online. Do you want to know how I did it? Stay tuned. And if you don't know how this strategy works, let me give you a bit of context. We're going to be working on the euro versus the dollar, and we're going to be using the 5-minute time frame, and we are going to be working on 2 trading sessions. We're going to be working on the London Silver Bullet and on the New York Silver Bullet. Okay, the London Silver Bullet is just when the market opens 1 hour ahead, so we have 1 hour for our trading, and the Silver Bullet is half an hour after the New York Open, and we have 1 tile window as well. So let's start off, and first thing I want to do is come to indicators, because on indicators we have sessions, okay, where we can basically grab our sessions and put the sessions that we actually want to see. So if we come down here and we see sessions, we've got Asia, London, New York. In this case, for me, I'm not going to use these. I'm going to use the London and New York Silver Bullet sessions. So we click here and we just had to go to add custom session, and for the first one, basically what we're going to do is come down here, and according to my time zone at 10 o'clock will be the London Open, and then we just come here and basically come down to 11, and this would be our London Silver Bullet. So there we go. We just have to apply, and it will appear on the chart our window where we can do some trading. Now we're going to add our New York Silver Bullet, and now we got this in. Basically we're going to come here and put our time, so in this case it would be 12 p.m. to 1 p.m. this would be from my time zone. Obviously we'd have to check for your personal time zone. And now we got this, we can basically see we've got the New York Silver Bullet and the London Silver Bullet. So now we have our trading window where we basically can open the trades. But how do we open these trades? Well, first we're going to go to the 5-minute chart, and now we are going to seek for the fair value gaps that happened before the New York or London Silver Bullet to be able to take the trades on them zones. So the next thing we're going to do is come to indicators and go to adaptive, and we'll be able to see here fair value gap. So obviously this I'm going to just close it to 20 bars so I don't get too many. Remove the filled rectangles because obviously we don't want them, and we just apply. So obviously now we won't see anyone's here because the last ones will be here. These are the fair value gaps that we can see, and what we're basically going to look for is for the price to come to these fair value gaps and continue down. Okay, so basically in this time window we are going to look for price to bounce off one of these levels. One requirement that we have is that if from the low to the fair value gap there's less than 15 pips, we don't take that trade. So in this case we can see that both of these fair value gaps, none of them we can use if price doesn't go any below and retraces back up. So in this case, let's go just a bit more forward, and we can see that it's not going any lower, and our London Silver Bullet has come to the end. So we don't take any trades in this day. So let's go ahead and go to the next Silver Bullet. This is the New York, and as you can see, here it is. And just now we are entering in a fair value gap, but if we come down to here and we do the measurement, we can see that we have 149 points, so that would be 15 pips. So we could easily take a trade on this candle here. Okay, obviously we're not going to take it below here because this value gap has already been halfly filled, so we can take the trade from above. So in this case, let's place our sell limit. I'm going to place it just above here, and our stop loss is going to go just above the movement. Okay, the last key point, that would be this one up here. That's where our stop loss is going to go, and in this case sometimes we'll get a positive risk reward and sometimes we'll get a negative. Here we can see that we just have a barely 1-to-1. In some trades we can have 1-to-2, 1-to-3, and in some it can be negative, because obviously going below this new low would be risky and we could get some reversals. So we're going to risk 1% here and place our order. Now we just need to wait for the price to touch our order. In our Silver Bullet time frame, and what we can see here, the shame price didn't actually open it. It would probably be opened if we had some more spin on it, but as you can see, the price would have touched it, would have opened it, and it would have closed in a take profit. But obviously it didn't touch, so we're not going to force that in. But as you can see, this is how more or less it would work. If we go to the next London session, we can seek for another entry, and as you can see, before the London Silver Bullet we have this nice fair value gap here. but obviously this fair value gap doesn't meet the requirement of 15 pips, so we would have to wait for price to move just a bit longer. And another thing that I want to let you know is that if we get fair value gaps inside our London Silver Bullet or New York Silver Bullet, I'm going to give preference to these. And an easy way that I'm always going to measure which fair value gap to take is basically I'll go from the high and just go down, and the first one that matches our 15 pips is one where I'm going to place the order in case there's fair value gaps in that zone. So here we can see that basically we didn't have anything because price just went vertical up, so we just go to the next Silver Bullet session, and you can see obviously we don't get trades every single day because basically we're only working in 1 hour, and sometimes we can lack of trades in a few days, but obviously you can use this in different assets, and maybe you can look at the euro versus the dollar and the pound versus the dollar, or against the gold, and see where you get a better setup. So now the next day we got it nicely spread up here. We have loads of fair value gaps that we can use. In this case this one has been used, this one hasn't, this one hasn't, and this one hasn't. If we take the measurement, we can see that this one doesn't meet the requirements, this one we could use, and this one we could use. So me personally, I'm going to wait for price to hit this one down here. So we extend this one there, and now we just basically wait to see if price comes down to our fair value gap. In this case it didn't, it stayed bouncing off this zone here, so perfect, no trade, no loss. We just go and move on. So we go to the London, and here we have another few fair value gaps, and basically we just need to wait for price to come. In this case it didn't meet, I don't think. Nope, in this case there's no fair value gap that we can actually use, so we would have to wait for price to actually do some type of movement to be able to use it. In this case this one we can't use it either, there's only 4 pips, and this is just a question of patience. Okay, at the end of the day I prefer having no entry than having losing entries, and this is obviously why the Silver Bullet normally gets a quite high win rate. So let's go now to our New York Silver Bullet, and like I say, we just have to continue looking for trades. In this case we can see that we have a few fair value gaps that we could touch. This is our high, we scroll down, we could use any of these down here, so obviously I'm going to use this one here if we don't get one inside the Silver Bullet session. So let's see if it comes down there. Perfect, it touched our fair value gap, so we're going to keep this one extended so it doesn't disappear, and basically we are going to look for this high here. The only problem here is that we're going to have a quite negative risk reward, okay, because basically our stop loss is going to go quite below because the price has moved quite a lot on the way up. So our stop loss would have to be right down here, about 70 pips, and we're only going to get more or less 30 pips of this trade, so it would be just a bit of 0.5 to 1 of risk reward. Obviously it is not bad, it's basically what it is. Some trades we have to take it like this, some trades we get a better risk reward, and it's just a question of trying to get the most trades out of it. And the best part of this is that these type of trades have obviously a higher win rate because basically we are looking for less pips. So there you can see another example, and just basically we have to go back to London and wait for our next trade. And then we completed our backtest. We've done a total of 30 trades, and to do 30 trades it took us an average of 2 months. As you can see, we don't get trades every day, and this is why a lot of people tend to use different assets with this strategy. But in this case, just using the euro against the dollar, we only got 30 trades in a period of 2 months. But obviously this isn't bad. The profit is there. We got a 3.5% profit, but obviously this is going to improve massively with a few changes that we are going to apply. So as you can see here, we did get a net profit of $352. So this is a 3.5%, as you can see here. Our win rate is more or less over 53%, so it is quite low. But obviously we must consider that we do get risk rewards above 1. So in this case, this covers the costs, and we had a max drawdown of $660. So we made a profit of 3.5, and we had a drawdown of 6.5. 0.6. So obviously it isn't the best strategy. It can work on its own like we just showed you, but with a few tips that we're going to see at the minute, it works shinily better. So if we come up here to Analytics Insight, this is a tool that I use to improve this strategy, and it only took me 5 minutes to go through and understand what was going wrong. So things like try stopping for the day after the first loss to improve profits. This is basically because I was trading in the London session and the New York session, and it's basically saying that if I don't trade in the New York session when I've already had a loss in the London session, then I'll have more profits. In this case, I'd have a gain of 108 profits. But here comes a quite interesting one where it says try avoid re-evaluating your strategy during unprofitable trading sessions. So if I click inside, it shows me basically the sessions where my strategy has got a better profit factor and a better win rate. So as we can see, the New York Silver Bullet didn't go well at all, combining with the New York session. Basically it's counting the New York session because it's when the trade actually has closed. But obviously we can see that we had a win rate of a 37% and a 44% for the New York session, but in the London session we got a 55 and a 50, so it's much more solid, and we got much more trades in the London and European session than in the New York session. So obviously this says one thing: only trade on London. So obviously that's the first thing that I changed. And then coming down by reading, try adding more filters to increase your win rate ratio. And it made me think that a lot of times having this 15 pip filter to actually supposedly get better trades was cutting me a lot of trades that only had perhaps 10 pips of distance. So what I thought is, okay, I'll eliminate that and leave it as a 10 pip. If the range has got 10 pips, I can enter the trade. And these were the only two things that I had to change to make this an absolute beast. And just so you can see a small recap of what we have changed is basically we've changed the range so we can approve trades, and we only take trades in the London Silver Bullet. So first thing we can see here that before we couldn't take a trade on this fair value gap here, because basically from the fair value gap to the low we only had 109 points, so it would be 10 pips. If we'll be using it before, we would need 15 pips for this to be valid, but now we can use it because we're only looking for a 10. And obviously the second and the most powerful one is that we're only trading in the London session, and this has increased our win ratio hugely. But let's switch to the most important part of the video, and this is the improvement that this strategy has received. We come here, we can see this is the old one and this is the new one, where we can see that points to improve. We still have 6 here that we could have a look at, and on the old one, well, obviously we had 10 points to improve. So obviously we have improved a bit, and if we come down to the metrics, we can see that in the same amount of time on the old one we did 30 trades, and in the new one we did 23 trades. That is quite a lot considering we were only taking trades in one session. And obviously this is because we reduced the amount of pips that we needed to validate a zone. And the next thing that pops my eye is the profit factor. We went from 1.2 to 2.1. That is nearly doubling the profit factor. But not only that, our net profit went from a 3.5% to a 9.4%. That is a 200% on our released profit. And not only that, our drawdown went from a 660 to 231. So we're going from 6.6% to 2.3% drawdown in 2 months of trading, achieving a 10% of profit. And that, ladies and gentlemen, is completely massive. And like I said at the start of the video, we got a 70% win rate compared to the 53% win rate that we had in the past one. So obviously having this win rate with a risk reward of minimum 1-to-1, because obviously we don't normally get small risk rewards in terms of negative, so most of the times they're 1-to-1 or higher, and with a 70% win rate, this is completely massive. So I would love to know what you think. Back down in the comments, let me know if you use the Silver Bullet too and how you use it. I would love to test it, and I hope you're good. My name is Jack, and I'll see you next time.